top producer, and I have with me at the close Jerry Gulke of the Gulke Group. Jerry, what's happening this week?
Well, we had some interesting things happen in the corn. As you know, last week was a very good week, and we actually gapped higher on Thursday, which means on Thursday morning last, we gapped higher than the previous day's high and left a trading gap in there, which is a void, we'll say. And then the next day, we traded kind of both sides of the range, but we closed pretty much on the high of the week and the high of the day, looking very bullish going into the weekend, thinking that this weather was going to bring this heat back in. And, of course, over the weekend, last weekend, the whole thing changed again, which so many times weather markets do. And we actually brought rain back in again. And, of course, on Monday, then the corn market fell apart quickly and dropped pretty fast, down from that 410 down to as low as 385, I think, even today's low, and left an island top, so to speak. So the Thursday and Friday of last week technically traded above the previous day's high, and then on Monday the market gapped lower. So they left 2 days up there by themselves, and as if the market was saying that was kind of an aberration for now. We think we got enough rain and the temperature and so forth that we can't hardly kill this crop anymore, no matter how warm it gets, and there really isn't a danger of prolonged heat staying there. And of course, now we got this hurricane coming in, which means if we had something in place, the hurricane probably would have moved it out anyway. So that gave us enough room now off of those lows, the June 30th low, to say it's a good time to start putting stuff back on again. We were heavily hedged before, took it off before the market June 30th, and now we're up to 30 to 40% hedged the last couple of days, and that's a pretty low risk, I'd say. If the market is as good long term as I think it is in corn, then we'll probably have to see corn close above 410, and then all bets are off, and you'll hear everybody talking about 450, and that would take another change in fundamentals that eats up this good crop we got coming. And I think the crop is a good average crop. It might even be another record, but we need that. But we aren't going to be real nervous about that corn crop until China buys more or until we get it put away this winter. And it's a very difficult task for corn to rally in the face of heat and rain and in this July-August time frame when you've kind of run out of time to hurt the market. Whereas soybeans, on the other hand, still have some time left. And we got a lot of water. We had 5 to 6 inches of rain in northern Illinois last night, southern Wisconsin. Iowa's got some stuff going over the banks and plenty of rain. I'm not sure that we can produce a big corn crop and a big bean crop at the same time. It always seems like the July or August weather always seems to be a problem for perhaps beans. And of course, when you look at the beans, they're near the highs of this move from June 30th, whereas corn is trying to look a little weaker. So I think on beans, you let the market decide over the weekend and see what happens, and I think we still have a chance. And of course, with this hurricane coming in the south, you're going to bring in water up in the south, and the forecasters today, National Weather Service, said that we got as much rain in southern Wisconsin, 7 inches of rain in places, that inland that far, that we're going to get in that hurricane down south. But these guys down south don't need flooding and so forth down there. So I think beans are a little well enough to leave alone, although I can't argue with anybody taking advantage of $9.81 November soybeans. That's pretty good money, and I may likely do that myself, but I usually try to give it a day like this, going into the weekend, I'd usually like to give it a 10-cent move. If for some reason beans drop 10 cents and corn is down 5 or 6, then I got to do something. And right now, I'm doing nothing in beans and nothing in wheat. If there's a story out there, it's going to be in the oil market, the edible oil market. Irregardless of biodiesel, we now have a problem in China with maybe 20% cut in rapeseed. Canada's down 20%, 25%. And I stated the problem in beans here, and in the United States not knowing for sure. And then you've got Russia, which we know has got a bad problem with wheat. They also raise, I think 70% of the sunflower seeds in the world are traded there, are grown there, and I think they account for 50 to 60% of all the exports of sunflower seed. It's another oil, and so now you've got maybe enough palm oil, but you don't have enough rapeseed oil. You got that cut, and you got sunflower seed oil cut. And these seeds produce a lot more oil per content of matter than what beans do. I think rapeseed is about 70% oil, 30% matter, whereas soybeans are about 40% or 37% or something in the oil. So when you lose oil worldwide, and that whole trade is a big oil trade at a cooking oil standpoint, and you have to make up something somewhere, you may have to come, or you probably will come, to the United States for some soybean oil. We don't export a lot of soybean oil because we can't compete with the rest of the world, but when we do, you could easily see where a 10% drop in foreign stocks, we'll say, could mean a 50% increase in the United States exports just to make up for that deficit. So when all things are good overseas, we got to burn our biodiesel. We got to burn our oil and biodiesel. And right now, the cooking oil is staying high enough to where it's economically impossible almost to burn it in biodiesel without some support. And if it's edible oil that's in demand, then that could go up. So if I'm negative beans, I kind of sometimes, if I'm over negative, corn, I kind of want to own some soybean oil and rapeseed against it, and that could have a ways to go yet, and we got to watch that and carefully. And otherwise, that's still a weather market, but I think and the market's understanding that we've run out of time to kill the corn market. We can still do something, but I don't think we're going to freeze it. But in the long term, I've seen projections where even at 165 bushels per acre national yield, which is possible yet, I'm sure, maybe 167, but we can use that. And I look at corn market being a long realizing market to say every time we get a crop report now from the government, even though our production may go up, our demand is going to slowly go up, and we'll likely eat or increase the demand side of the corn supply and demand side for the United States. Each time we come up with a new increase in corn, I think we're going to increase the demand to eat up 75 or 80% of that. Whether it's ethanol or exports, we should export more corn because the feed wheat is now becoming a problem. And feed wheat is now trading at a premium in Europe and in Asia. The next thing we want to watch for is if South Korea or someone like that or Europe comes back to us for corn that hasn't done it for a while. So I think it's good news for all the markets. We put a floor under corn, I think, due to China and the world feed wheat problem, but that could very well be still 25 to 30 cents below where we're at now, and then before we see what kind of crop we got, and then we inch higher after the market after we harvested all this. So other than that, I get some hedges on the corn, and if you can't stand prosperity, then you sell some cash beans, but I'm hedging the corn because my basis just fell out of bed completely. It's 59 cents under, so I'm going to do the hedges and then run mismanagement on that and see where this takes us. A lot of water, though, and we've yet to prove whether a lot of water and heat is as good as normal water and cool weather last year, and because we're so much different this year in our weather that this is going to be a good test for biotech seeds to see whether they can manage this wet feed all summer long.
Okay, thank you very much, Jerry.
Alrighty.